Hi, good morning, young and innovative minds. I, Satika, welcome you all to this marvelous interactive webinar, Bull versus Bear Bazaar, organized by the esteemed Club Coding Ninjas SLM. I'm very thrilled to see so many of you joining us today. Today, we are here for a wild ride through the financial market of Wall Street, presenting to you the highly anticipated event Bull versus Bear Bazaar. It unfolds with traders gearing up for their strategic investment on the best stocks. Witness the intensity where the strategic move makes all the difference. The trading session promises to be engaging and competitive with a suspenseful twist on who will rise as the stock stars and making headlines in the grand finale. To gain a deeper understanding of simple strategies to attain success at the stock market, we're honored to welcome our speaker, Mr. Suraj Kumar Asoka. He has been a derivatives trader for over 3 years with expertise in F&O trading using algorithms and driving partnerships initiatives at Top Grow. Sir, I would like you to kindly take over and continue with your presentation. We are eager to learn more from your expertise.
Hello. Hey guys, can you all hear me? Just let me know in the chat. I had a minor issue with the internet. Can you hear me? Can you see my screen? Yeah, do you guys want to just let me know on the chat if you guys can hear me or see my screen? Okay, awesome. I think most of you are saying yes. That's good to go. All right. Firstly, congratulations to all of you because I know it takes a lot of effort, especially when you're a student, to show up on a Sunday morning, right? And for a topic that I might be very passionate about, but might be pretty new to all of you, right? Which is the stock market, right? And we're going to keep this very interactive. Here's an idea where we want to help you take that first step in the stock market, right? All of you have heard probably very wild stories of somebody who made enormous wealth in the stock market to even somebody who lost few tens of lakhs within a few months in the stock market, right? So both sides of the spectrum does exist, right? And what's exciting is we're talking about money, right? Most of us want to make money, want to be rich, right? And one such avenue is the stock market, right? Small introduction. Like most of you, I am from an engineering background as well. I did my BTech in computer science from RV College in Bangalore and spent about 6 years working with startups around product analytics and business models. Involved a lot of management consulting, business consulting for a long time. And then when I was doing that job is when I started investing into mutual funds, equities, started seeing what's happening in the market, right? What's the buzz all about, right? And at one point, I kind of transitioned completely into the stock market because I wanted to play with enormous amount of data, right? There is no place like stock market where you get so much data each day, and in fact you get so much data each minute, right? And if you have a knack that you want to process the data in your own algorithms in your own ways and find some insights, right? Stock market is the best place for you because it'll help you kind of see whether the inference that you're drawing is correct or wrong, because the next day you will see, okay, is your hypothesis proven right or wrong, right? So that kind of got me into the stock market completely, right? So I started downloading enormous amounts of data, going through them each day, and seeing what other successful traders are doing, what other successful investors are doing, right? And finding a method to the enormous amount of chaos that is there in the stock market, right? So that's how I transitioned myself. And right now I happen to be in a role with Stockgrow where I work in the stock market, and I am a trader on my own as well, right? Managing close to about 20 lakhs, and which is equates to about a crore in investments every day, right? And another thing that I might do is running. This just helps me kind of keep everything in control and let go of the frustration and the anxiety that might get built up every now and then, right? So that's about me, right? And most of you, I want to open it up to all of us here, right? I think there are oddly close to about 50, 60 of you on the stream. I can't see the number, maybe more. But I want to ask you all a simple question, right? How many of you, when you look at your career and think about what you want to do in it, right? For how many of you, the answer is you want to work with the smartest people in the world, right? I'm going to just flip to the screen. Okay. I see plenty of you saying yeses, right? That's interesting. Work with the smartest people in the world, right? Just give me 1 minute. Right. So work with the smartest people in the world, right? Most of you said you want to work with the smartest people in the world, right? So when you look at different industries there are, right? So there's automobile, there's up and coming solar, there is manufacturing, which is your traditional ones, manufacturing, engineering, consumer facing FMCG, and even technology, engineering, these kind of things, right? Um, One place that combines technology, engineering, data, and has some of their smartest people working around is the world of finance, right? And inside the world of finance, you have these large banks that operate, but something that's easy for everybody to enter, right? Comparatively easy for everybody to enter and learn about and make an impact is the stock market, right? And as you grow in the stock market, you will find some of the most emotionally intellectual people in the world, right? For them, they're very sorted in terms of what they're doing, how they see money, how they see societies growing, how they see countries growing, and how they see the economy, right? So you could look up some of the biggest hedge funds in the world, and people who run them are people who are one super smart, and they've gotten there from building their careers in the stock market, right? And it's not like they got inherited to it and things like that, right? So one, you have some of the smartest people in the world, right? Now the next question that I want to ask all of you is, how many of you want to get rich in your lifetime, right? You want to make money because you want to buy that fancy car, you want to buy that fancy house, right? Or you want to serve society, you want to have that money, you want to have so much freedom that people around you kind of evolve their lifestyles, grow in terms of how they perceive life. For how many of you, that is one of the objectives that you see for yourself, make a lot of money in your life? Rich enough to have many car garages, that's one of the answers that I see. That's interesting, and I wish you have that, right? And I see the general consensus is nobody ever says I don't want to make money, right? If they do, probably they have already made a lot of money, right? So all of us want to make a lot of money, right? And if you look at one of the stats, right, here we have the 10 richest people on the planet, right? And what inference I wanted to draw from this picture is not what the total net worth is. Sure, that's impressive. Is the other side of it, right? Now, if you remove the stock of Tesla from what Elon Musk's worth is, he would probably be not be the richest man in the world, right? He would fall a few places lower, right? The same way with everybody else on this list. If you remove Amazon's share price, what the public is valuing it, right? Probably he's not the second richest man in the world, right? Similarly, if you take the Indian context, if you remove Reliance, right, the value of Reliance stock on the stock market, probably the Ambanis wouldn't be as rich. Right? And the same thing applies to the Adanis, the Tatas, the Jindals, everyone. Right? So for all of them, stock market has been a place where they created a lot of wealth. Right? And that's why they make it to lists like this. Right? Some of us sure can dream of it and can make it happen to be on these lists. Right? But the bigger inference is the stock market is the one place where you can really see your wealth multiplying, right? Over years, over months, right? And over decades, right? You will see your money slowly growing and multiplying itself, right? So those are two primary reasons why I still continue to be in the stock market, right? And I'm sure for most of you as well, it's something that will interest you. You work with the smartest people, and it's something that can make you rich, right? So these are two things, and with that context set in terms of why the stock market is important, right? Let's look at a video in terms of how the stock market works, right? What is a stock? What is an exchange? Right? Does the company benefit if its stock goes up on the stock market, if its stock goes down on the stock market? Things like this. Some of this might be a little, basic for some of you, and for some of you, some parts of it might be new, and you want to dig deep into it, right? So let's go through this video, and if you guys have any queries or questions in this, please feel free to drop it. Okay, there's some. issue playing the video. Give me 1 minute. Okay. Okay.
What is the stock exchange?
So I hope all of you can hear the video and see the video as well.
What is the stock exchange
So
and how does it
here you
work?
go.
The stock exchange is nothing more than a giant, globally networked and organized marketplace where every day huge sums of money are moved back and forth. In total, over 60 trillion euros a year are traded, more than the value of all goods and services of the entire world economy. However, it's not apples or second-hand toothbrushes that are traded on this marketplace, but predominantly securities. Securities are rights to assets mostly in the form of shares. A share stands for a share in a company. But why are shares traded at all? Well, first and foremost, the value of a share relates to the company behind it. If you think of the value of the company in terms of a pizza, the bigger the overall size of the pizza, the bigger every piece is. If, for example, Facebook is able to greatly increase its profits with a new business model, the size of the company's pizza will also increase, and as a result, so will the value of its shares. This is of course great for the shareholders. A share which perhaps used to be worth 38 euros could now be worth a whole 50 euros. When it's sold, this represents a profit of 12 euros per share. But what does Facebook gain from this? The company can raise funds by selling the shares and invest or expand its business. Facebook, for example, has earned $16 billion from its listing on the stock exchange. The trading of shares, though, is frequently a game of chance. No one can say which company will perform well and which will not. If a company has a good reputation, investors will back it. A company with a poor reputation or poor performance will have difficulty selling its shares. Unlike a normal market in which goods can be touched and taken home, on the stock exchange only virtual goods are available. They appear in the form of share prices and tables on monitors. Such share prices can rise or fall within seconds. Shareholders therefore have to act quickly in order not to miss an opportunity. Even a simple rumor can result in the demand for a share falling fast, regardless of the real value of the company. Of course, the opposite is also possible. If a particularly large number of people buy weak shares because they see, for example, great potential behind an idea, their value will rise as a result. In particular, young companies can benefit from this. Even though their sales might be falling, they can generate cash by placing their shares. In the best case scenario, this will result in their idea being turned into reality. In the worst case scenario, this will result in a speculative bubble with nothing more than hot air. And, as in the case with bubbles, at some point they will burst. The value of Germany's big...
Awesome. Right. So I hope that gave us a good idea in terms of what happens in the stock market. Right. One thing that I found very interesting there, right? They showed two images where one share was rising and the other one was falling. And very, in sync, they used the logo of YouTube on one side and a TV on the other side, right? It just shows the changing trend in terms of more people moving on to digital devices and OTT platforms compared to a traditional television, right? And if you see, the sales of television is dipping, which is why the price of its share is falling down. But there is more demand and more people are kind of catching on to this internet trend, right, of watching and consuming content through social platforms, which is why the shares of those platforms are going higher, right? So that's one thing that I found very interesting and apt in the entire video. And what about you guys? What part of the video did you find it very interesting, and do you have any questions around what a bubble is, how does the share price go up? and things like that. Anybody with any question? I'll just pause for 20 seconds. The pizza analogy is very interesting. Can anybody manipulate the share prices then? Well, I think it broadly needs to take us to the overall question, right? Shares go up and down based on supply and demand, right? Very apt example, a small scale one. Let's think about you walking into an onion market, right? So at the onion market, there are people who are selling different varieties of onion at different prices, right? Now, who establishes what the price of it should be? It is most of the times how many people are walking into the market on a given day, right? If there are buyers who are coming in, the prices might fall down a little, right? If there are less buyers, right? Basically, if the demand for it, right, is more, right? Sorry, if the demand for it is more, the price might go up, right? If there are less people who are coming in, to attract more people, the prices might be a little lower, right? Now, can the people selling it or the number of people walking in at once, can that be manipulated? Sure. Only if that is played around will somebody be able to manipulate it. Basically, they need to play around with supply and demand, right? Now, that happens very rarely, probably less than 3% of the times in the stock market. But does it happen? It can, right? Which is why most advisors will recommend you to stay away from penny stocks because it's very susceptible to such things happening, right? Um, Okay, Harshit, that's a very good question. In fact, when I started, I had this question, right? So I would go to every advisor and say, what difference does it make, right? So today, the price of Reliance is up 5%. Doesn't mean an employee in Reliance is getting a 5% hike tomorrow, right? Or even Mukesh Ambani or anybody in their leadership can go out there and raise more money. Nothing changes for them, right? It's not like you're going to price your products lesser now that you have more money, or you're going to price your products higher now that you have more money, right? So nothing changes. Then why does the stock market exist, right? It's primarily two reasons. One is it gives you an indication in terms of what you are doing, right? So if Reliance today comes out with like a bad result for the last 3 months, all its shareholders are going to believe, okay, the future production projections are weak, which is why they will go and sell more of the stock. And if more people are selling it, the same story of supply demand, the stock falls down, right? Only if the entire market feels that, okay, the results were great, right, is when the share prices goes up. And that's simply because more people want to go and accumulate that stock, right? Now, this is one thing. It gives somebody inside the company a good indication in terms of how they're moving the company forward, right? And the second thing, right, is if the company is moving forward well, in future, the company can pledge more of its shares to raise money, either from the public or through institutions, right? And use it to reinvest and keep growing the company, right? So that's where your corporate governance comes, and that's where a lot of companies benefit from it and keep growing, right? If you go back to the US example of AMC, right, so they had these stores where they sold cassettes of video games and things like that, right? Now, because of a Reddit event, you guys should go read about it. Because of a Reddit event, the stocks speculatively went high a lot, right? So the company was smart enough to use that rally, use that speculation, right, to go sell certain part of their company, raise money, and reinvest it to build newer business lines, right? So, and they didn't cause that speculation. It was caused by a group of people on Reddit, right? So they just used it to raise more money, right, and invest it into different business lines, right? So the same thing happens with all of the shares that are traded in the market. If the price goes up, they improve it, right, and they buy it, right? Demand and supply, support and resistance. That's it, Navneet. Yes, I think that's a good summary of it, right? And Harshit, I hope you got the answer to your question. It is speculative, but there is some logic to how it is speculative, right? It's almost like you and I want to buy a bat, right? A cricket bat. Will we agree for the price of it, right? If I'm the seller, I'm going to add some emotional value to it, to say someone else played with this bat. This bat is signed by some other person, right? So all of that helps me increase the value of that bat, right? Similarly, when you're buying a share as well, right? So there are different logics, different conversation, different stories that kind of validate as to why the price of that stock is justified, right? And if you buy into it, you buy it. Otherwise, you go find another guy selling a bat, right? Probably at a higher value, lower price, and you can go buy that, right? So it's like that. Should we invest in only one sector which is currently growing, example tech, or should we always invest in different sectors? Okay, Saransh, so that's like a very spot on investment advice that you're seeking, right? A lot of it will depend upon what is your objective, right? Is your objective you want to make money in the next 3 years? Is your objective you want to make money in the next 5 years, in the next 10 years, right? Or you want to make money in the next 1 year, right? So based on that is how it matters. Usually people investing only into a single sector, right? One, have a very strong belief and a bias towards that sector, and two, they're in it for the long run, right? About 10 years, 15 years. Then it makes perfect sense, right? But to de-risk themselves, right, for the short term period, for a 1 year, 2 year, 3 year period, right, people recommend you to diversify, right? And the reasoning is very simple, right? So if you invest into tech sector, right, probably, who knows, it might crash in the next 2 years or 3 years by 20%. I'm just giving you an example, right? And your value at the end of 3 years is gone down by 20%. But if you hold it from there on to another 10 years, say 13 years, the value of it will appreciate much more than you had diversified, right? Which is why for the short term, you are better served to be diversified. If your view is long term and if your reasoning is very strong, right, then it is great to invest into a particular single sector. Okay, Saransh, I hope with that your questions are answered. Interesting questions. Keep them coming, and we'll just move on to the next part. Okay, so now let's just solidify a bit in terms of what we have learned, right? I'll take an example of one of the largest IT companies in India, right? So there's this company that was started by 7 people in a smallish office in Bangalore, right? And their purpose was, we want to write software for the world, right? Um, they started doing it, and they did that for about 7 to 8 years already, right? And they reached a point where they said, and until then they were all bootstrapped, right? VC money was not as publicly available like how it is now back then, right? So whatever they could get from their friends, families, they pulled that in. They ran the business for 7 to 8 years. It was fairly successful, right? They probably had about 4 or 5 clients, big ones outside of India, right? And then they realized, you know what? There's a market out there where this 4 to 5 can be 50 to 100, right? And to do that, we need a lot of money, right? Money to hire more people, money to get more office space, right? Money to keep servicing once we onboard the client, right? And things like this, right? So initially, the capital that they needed to kind of expand that business was quite a bit, right? In those days, roughly about 13 crores, equivalent to a 300, 350 crores today, right? So they needed about 13 crores. This is in the early 90s, right? So that's when they said, you know what, we will go into an initial public offering, right? So they said, okay, a part of our company, right, roughly about 40 to 45%, we will sell it to the public, right? In that 40 to 45, half of it or three-fourth of it is usually taken up by institutions. Your big mutual fund houses, sovereign funds from abroad, and things like that take up one part of it. The remaining is made available to public, people like you and me, right, to invest into them, right? So one share of that company was roughly about 92 rupees, right? So they said, we will sell so many shares equating to about roughly 13 and a half crores, that you guys buy into it and we get the money to reinvest it and grow our company. And they came up with, all the documents required to tell you, this is how we've run the company till now, this is how we want to run it in the future. Like how one of you mentioned, tech is the future, so it's going to keep growing, and here's an opportunity for you to become a part owner of our company, right? So more people went, they bought into the stock, right? And today, if you had invested then, today you would have been making a lot of money, right? And one such that example that we're talking about is Infosys, right? So in 94 is when they came out with their IPO, right? So if you bought 100 shares, we said 95 rupees, close to that is what a price of one share was, right? So roughly about 10,000 rupees invested then, today would be of value of 15,000 crores for you, right? And this is, we're talking about 2021, right? So roughly the number is probably still there, right? If not 15, it's probably still at 17 crores, right? So 10,000 rupees has become 17 crores over an odd period of 30 years, right? So for 30 years, you need not have had to do any work, right? The company would have focused on growing their reputation, growing their business, growing their profits, right? All you had to do is stay invested, right? And in this 30-year period, there were times when the stock dipped quite a bit as well, right? And in those periods, you didn't have to worry, right? All you had to say is, you know what, I still believe in it in the long run. It will do well, and continue to stay invested, right? And you see different things there, a bonus, a split, a bonus, a split. These are all corporate actions that the companies take to make it easier for their shareholders, right? Or reward their shareholders for showing their loyalty with them, right? So a bonus is when you get more money than the price of that share, right? Because the company did enormous amount of profits. A split is where, when you have one share of Infosys, you begin to get two shares of it, right? And they half the price. And the reason they do it is, it's easier to buy a share that's at 1,000 rupees than at a share that's at 2,000 rupees, right? Because that mental barrier comes in that it's too costly, right? So to kind of avoid that and make it easier for people, they kind of split and half the value of that share and give you double the stocks, right? So all of this has happened, and with all of this, a 10,000 30 years ago is today for you 15 crores, right? And most of you might have this question, and most of me had already heard this story. Sometimes even I get upset to say, why does everybody make it about if you had invested then, if your grandfather did this, if your father did this, today you would be sitting on a pile of cash, right? But how helpful is it to us, right? What is actually helpful to us is the story of how it happened, right? Not everybody who invested 10,000 rupees in 1994 is actually sitting on 15 crores today, right? And the reason is, one, they felt as soon as 10,000 reached, let's say, a 10 lakh number, they said, this is it. I think it's better served that we book our profits and get out. That's one. Two, when it hit 10 lakhs, at some point after 10 lakhs, your money came down to 5 lakhs, which means it eroded by 50%, right? And that's when there's a lot of fear in the market as well, right? Everybody's selling. There's a lot of fear. And even you're scared that, dude, that 5 lakhs can become zero one day, right? And that's when you exit, right? So you play into the fear that the market induces in its retailers, right? So when people do these mistakes, right, you don't end up making enormous amount of wealth, right? You could pick, and if I'm being very frank, if you pick the 50 nifty 50 stocks, the top 50 stocks in India, right, and invest it into five of them, right? I'm sure three of them will turn out like this, where you make enormous amount of money. One will be okay, and the other one will fail. This is like law of averages, right? So the other one will fail, but net, you would have made enormous amount of money, right? But that's only possible if one, you don't do a lot of action on it. You don't actively sell it when it's the low, right? Buy it when it's the low, or try to buy it when it's the low, sell it at the high. Things like this is what will reduce your chances of doing it, right? And the second thing is you stay invested no matter what, right? If possible, you add more, or you stay invested in it, right? So if you do these two things, even you're bound to make a lot of money over multiple decades, right? And here you need to fight something which is very hard for young generation to do today, which is instant gratification, right? So we want to add our money to today, and tomorrow we want to be the richest people in the world, right? And it's very unlikely. And the same thing applies to if you're starting a business and things like that, right? You can't start off a business today and expect you to be like a Sachin Binny of the world, where somebody comes and buys you and you become a billionaire overnight, right? It's never like that. So when you fight that urge of instant gratification, better things await you, right? In stock market, everywhere else as well, right? Now, if you look at that story, right, I told you Nifty 50, right? From 1992, when that's probably much before all of us were born, right? The index was valued at 573, right? So an index is just you know, a, a, a bunch of stocks put together is an index, right? Here we're seeing Nifty 50, as you all can see, and this is the top 50 stocks in India based on market cap, right? And that for us in 1992 was at 573, right? And mid of this year, right, it was at 19,000, right, or close to 19,000. And that's a 12% growth year on year, right? For a 36-year period, 33-year period, right? Now, this particularly, right, is super impressive, right? Because if you look at FDs during the same period, they probably gave you about 6 to 8%, right, annually, right? Whereas the market, and the same thing applies. Even in FD, you put your money, you need to forget about it. And if you put your money in 92 and forgot about it, it grew at 12%, right? And that's almost 50% more than what an FD is or gave you through this period, right? Sure, you did have downfalls, right? There were times where it corrected at a max of 55%, right? But no time it corrected more than that, right? And every 3-year period, you saw a new high. You saw more and more profit accumulated into your account, right? So if that was happening and you stayed through the entire journey, you made about 12% CAGR over a period of time, right? And some of you might feel, there are other assets out there which are probably doing better or giving better, and the only asset that most of us discuss is cryptocurrencies, right? um, Personally, I am not into it, right? I probably haven't read much about it as well. But on the outside, as an investment, right? As a technology, it's fabulous. As an investment, I think it still needs to stabilize itself, right? If you have an asset, or if you have anybody who's coming to you and telling you this can give you 40% annualized return over a 5-year period, there is probably some fine remarks that you are missing, which could make a lot of difference, right? So anybody who's coming to you with more than 20% annualized return, you need to have your antennas much stronger to find what is the detail that you're missing, right? So that's the story of the other side. Now we all know what happened with cryptocurrencies, right? So you had coins, meme coins that grew 20, 200%, 400% overnight, right? But eventually, what happened to all of that? There was a time where they crashed and went to zero, right? And my bigger burn in my tummy is when I hear NFTs, right? At one point, it was hyped so much that people literally multiplied money in a couple of hours, right? And all of that is worth zero today, right? That you don't stand in the stock market, right? Especially in the Indian stock market as well, right? So in the Indian stock market, your risk is much lesser compared to some of the newer assets, right? A little more than your fixed deposits if you're doing an index fund, and 12% is something that you will eventually get, right? Now, for all of us who feel, you know what, Suraj, it's great. I will grow my money at 12%, right? But I have that intellectual kick when I can tell myself what is going to happen in the market tomorrow, what is going to happen in the market 1 week from now, what is going to happen in the market 1 year from now, right? And for people who think that way, right, and usually people who think like this are people who get a little bit more deeper into the market, because everyone else, they put it in a mutual fund, the fund manager takes care of it, and your money grows, right? So for people who think like that, right, there is one part that I want to touch upon, which is technical analysis, right, where what this does, it gives you a chance to make money across different market cycles, when the market's going up, when the market's coming down, and when the market's staying stagnant, right? So if you look at even this graph, right, for large periods of time, right, the price stayed within a small range, right? Here as well, the price stayed within a small range. Here as well, the price stayed within a small range. Here as well, the price stayed within the small range, right? Now, for those periods, right, is when something like technical analysis will come of most benefit, right? Now, to understand technical analysis, the first thing is you all understand a line graph, right? Where you have time that is plotted on your x-axis and you have price on your y-axis, right? Now, what does a line graph give you? It gives you where the price closed at the end of a particular time frame, right? Where was the price at the end of 5 minutes? Where was the price at, let's say, 11 o'clock? Where was the price at 11:05, right? But it doesn't give you what happened to it in between 11 and 11:05, right? So to understand that, you have candlesticks, right? So candlestick primarily gives you for this particular time, right? So if you take this as something between 9:15 to 9:20, what happened for the price? Where did it open? How low did it go? What was the high and what was the close, right? So this gives you more data to kind of analyze and draw inferences compared to a line graph. A line graph, like I said, you only know this point, which is where it closed, right? For some of you, where even this diagram is new, you're seeing it for the first time. A short recap is, you basically have two kinds of candles. There is a green candle, there is a red candle, right? In a green candle, the open, right, is where the price opened, right? How low did the price go? How high did the price go? And where did the price close, right? Again, this is also based on supply demand during that particular time frame, right? So if you take, and these candles can be drawn for different time frames, starting from 1 minute all the way till 1 year, right? So 1 minute till 1 year, you can draw these candles, right? So if you take this as a candle for the first 5 minutes of the day, which is usually 9:15 to 9:20, you will see, okay, maybe the price opened at 100 rupees, right? And suddenly all the people in the market felt, you know what, 100 is a little high, let's sell it. So it from 100 it went till 90, right? And then a market consensus got built saying that, okay, 90 is already very low for this, right? Which means a good opportunity to buy. So more people started buying, and it went all the way till 120. And the guy who bought at 90, when it went to 120, he said, okay, I've already seen quite some rally in this time frame. So let me book some profit. So when people like him started booking profit, it closed at around 110. So net, your price moved from 100 till 110, right? But at some point, the price was at 90 and also at 120, right? So this is all the story behind a green candle, right? And same way, if it is a red candle, price opened at 100, people felt, it's low, and more people started buying in. It went all the way till 110, right? And when it went to 110, people said, okay, it's already high, we need to start booking our profits. So it fell and it went all the way till 80. And when it went to 80, people realized, you know what, I think more and more people are only scared with and it's a good opportunity to buy. So they, when they started buying it, it closed at 100, right? So it closed. So basically, you opened at 100, went till 110, it fell till 80, and it closed at 90. So you have a difference of 10 points, right? So net it fell by 10 points. At some point it was at 110, and at some point it was at 80, right? So this is single candle patterns, right? Now, how do you identify when to enter and when to exit? And this is something that, chart analysts, technical analysts, or who otherwise exist in fund houses or brokerage firms do, right? Which is identifying when to enter and exit, right? To kind of give you an idea, I'll just speak about two processes, right? One is a resistance, the other is a support, right? What is a resistance, right? So as you all know, resistance is a pushback from a certain higher level, right? In charts or in general life, we just refer to resistance as a pushback, right? So if we look at charts, right, resistance is when at a higher level there is a push down, right? If you look at the price of this particular security, you'll see once it went to this high level, right? Second time it went to this high level. Third time it went to this high level. And fourth time it went to this high level. One common thing, every time it goes to that level, there are more and more sellers in the market who are pushing the market lower, right? So that happened to you four times. So that's when you draw this line and say, okay, there is certain level of resistance there, right? It's a general consensus of all the market players that beyond this the price is high, right? Now there will come another time where you will see that line broken, right? And when it's broken, this resistance so is called this process is called breakout of the resistance. And most traders believe that this is a good upward move. When you have a resistance and it's broken, you have momentum on the upside, and you are capable of trading it for more profits, right? So this is resistance and breakout, right? Similarly, you have support and breakdown, right? Support is at a lower level. There are more buyers who are sitting and saying, okay, below this the value is undervalued, the price of the stock, the price of the security, and we can enter and start buying. So more and more people start buying at these support levels. This will push the market higher, right? And eventually, when you have a breakdown of this support, right, is when the price will start moving lower much further, right? And this is also one way people use to trade the market. So when a support is broken on the downside, they will go short, hoping that the momentum gets built up, right? Now, in the next slide, I'll just show you something, right? So what we just discussed, support and resistances, all of this come with a certain percentage, right? So this percentage is how many times will what you're expecting happen, right? Now, if you just look at another pattern, double bottom, the same thing is happening. You're seeing support here and resistance at this level, right? So when resistance is broken, people enter here as this much as their risk, right? So if it doesn't go up from here, they will believe, okay, I will exit at this level at a certain loss. But if it goes up, I will take profit at this level, right? And what you see are 78% is what is giving you what's the probability of this system being successful. Like if you take 100 trades based on this system, 78 times it will go according to you, the remaining 28 times it will go against you, right? Now all of you might blindly believe, if I trade this, I'm going to make a lot of money, right? But there is another thing that you guys need to keep in mind, which is when you lose the 22% of the time, if you lose more than what you're making, right, then probably you're still going to lose a lot of money trading this, which is where your mindset, psychology, and things like that come in, right? The same thing applies if you're a trader or an investor. All of it, right, is what is the risk that you're comfortable with, right, in a given period of time. What is the risk you're comfortable with for today? What is the risk you're comfortable with in 1 week? What is the risk you're comfortable with in 1 month? What is the risk you're comfortable with in 1 year, right? So these are things eventually you will get to, right, when you start deploying larger capital of your own, either in investing or trading, right, or when you start seeing how other people operate, right. And today we live in an age where most of them are kind enough to update it on Twitter, right, some genuine ones, and then there are definitely fake ones. And once you're in it, it becomes easier for you to identify the fake ones as well. But if you learn from the genuine ones, it makes it easier for you to kind of fasten that process of building the mindset, building the psychology, to consistently make money in the market, right? So these are all technical patterns based on support and resistances, right? So what all did we cover? We covered the idea of a share, right? How does it benefit the company? How does the prices move up and down? Primarily supply demand. And next, in technical analysis, we covered what is a candlestick pattern, how does it work, what's a candlestick, how does it work, and then we covered two crucial things: support and resistance, right? Most technical analysts speak in terms of support and resistance, right? And they trade the breakouts, right? So if a support is broken, the momentum is on the upside. If a resistance is broken, momentum is on the downside, right? So this is a conclusion in terms of everything that I wanted to give you as a purview into the stock market, right? Now, furthermore, right, all of you, I think, are invited to participate in a league, right? The Bulls versus Bazaar, the Bulls versus Bears Bazaar League, right? I am not part of it, which is why I might not see it here. But if you've followed the process where you registered on a link and then used the same number to log in onto Stock Group, you will see that league here for you, where there is practice and prepare, right? And when you click on it, right, the idea of making you participate in the league is we want to give you 10 lakh rupees of virtual money, which you can use to test some things that you learned today, to test some things that you guys want to build hypotheses around, things like technology is the future, things like some particular stock is in the news so it will go up. So the best way for you to do all of that is through virtual money, right? And we provide that to you, and we make it more exciting by kind of putting a competition around it where you are competing against your friends, right? So in this competition, you see we have ranks as well, and there are certain rewards that each of you get, and these rewards could give you good stock grow merchandise, right? So that's exciting, right? So you have these rewards, and you will all see a duration here. This particular league is starting tomorrow at 9:35 and will go on till the 20th, till 3:25. So you will see this for your league as well. And then when you press continue, you'll see two portfolios, an alpha and a beta. You can click on either one of them, both are the same, right? It's just two because you can participate in other public leagues as well, right? When you click join, you have 10 lakh rupees as cash balance. You can use this to buy any stocks, right? And usually this is in the order of which stock grew the most the previous day, which for us was Friday, right? You can see that, and then you can move it from low to high, right? There are different kinds of traders, right? There are people who come in at the bottom and say, okay, this stock is very good, or Bandhan Bank is a good bank. It's grown quite a bit over the years, right? There might be some hiccups, which is why more people have sold it, but it's not going to go lower than this. So you go and buy, right? Or you can check if this price at its is at its support level, right? Or is at its resistance levels, right? And you can see like a bounce back, which is why you want to buy it, right? So we've enabled charts through the platform itself where you can go see it, right? So you see something like here, this line is for you the support level for Bandhan Bank, because many times it is bounced back from that level, right? So it could see a move till there, right? So you could probably go short on this with this being your stop loss, right? And I say this with all confidence because I'm assuming you will do it with only virtual cash, right? So before you do it in real cash, please practice well on the Stockgrow app, right? And then consult all your financial advisors and then take that call. So that's just a word of caution to all of you, right? So you could probably go short on this till this level, right? And I would do this if I see this chart and I want to trade this, right? So can I go short on this? Yes, we've enabled that as well for all of you, right? So you can go short, you can place a regular order. A market order is basically I get the price that whatever is playing on the market, right? If I place a limit order, I can say no, I will go short when it goes to 242, a little bit more higher than where it is today, right? So today, right now it's at 240.7. When it goes to 242, then go short for me, right? So you see this. And then a bracket order is basically, it also enables you to place a stop loss in book profit. So if I'm going short, my stop loss is on the higher side, right? So 5% stop loss is probably 254. So I went short here, but if it goes against me and the price starts moving higher, I will exit it here. And same way, book profit, if the price goes lower by 5 more%, then book my profit and I'm good to go, right? So this is how your stop loss and book profit works, and you can place this also. So basically this will be active once your buy or your initial order, whether it's a short sell or a buy, is active, right? So that's how this works, right? I can review this and do a short sell. So which means I've short sold this, and I go into view in my portfolio. You will see that I've already spent close to 2,500 rupees, right? And I can spend more, I can add more. And here you don't see any stocks because the market's not live as of yet, right? So this is how this entire process works, right? Now, if you want to stand a chance to be among the top performers, right? The rule is simple: irrespective of how much you deploy, on 10 lakhs, if your return is more, you'll be on the top, right? And you start seeing the rank here, right? And to be on the top, few simple things is invest the entire 10 lakhs. So play around with the entire 10 lakhs. Don't invest a small amount, right? So your chances are more if you invest all of the 10 lakhs, and pick about 5 6 stocks and 5 6 thought processes, 5 6 stories that you're telling yourself as to why this could happen, right? Like I showed you a support and resistance. Just figure it out yourself, right? If it does well to you, you've learned something new. If it doesn't, you still have learned something new at the cost of nothing, right? You have not lost a lot of money, right? So continue to play around like that. So once your league starts, or once your prep zone starts, you can place n number of orders that you want, right? We also factor in a small percentage as a transaction charge. This is to keep it as real as possible for you, right? So here it's fully virtual. There's nothing more that you will lose, right? It's more of a practical lab for you to sit down, learn, and experience the stock market in real time, right? And if you still have any further questions, right, after this call, you can always post in the chat here, right? So we're all present on the chat, and we will answer it for you, right? Like you can see, there's some interactive stickers where you can pop up a question or a general question to people, right? So this is the entire flow of participating in the league. If you have any question about participating in the league, you can ask it here. Now, broadly, if you have questions about the market, right, you can shoot them. Profit margin, okay, see, that really depends upon how the entire group performs, right? You could make 2% and still be on a top, because market as a whole has fallen down, right? Which means most of your friends as well lost a lot of money, right, in the virtual world itself. So that is not defined, right? That depends differently for different people, right? Okay, I'm just going scrolling up for a few more questions. So guys, I'm just opening the space up for more questions. Please feel free to drop them, and I'll answer as many as possible, and then the remaining you can always post it on the chat within the particular league. We have to make a portfolio. Okay, so AJ Tech Tips, the portfolio will have to be for a shorter period of time, for the period for which the league is live, right? There is another option where you can make a long-term portfolio, which is your model portfolio, right? This is not part of the competition. I'm just sharing this with you. So this one is virtually available for you forever, right? You can add this, and you can track your returns daily, weekly, monthly, yearly, right? And you can see your profits as well. So this under portfolio, if you go to model portfolio and the stock model portfolio, this one for you is a long term portfolio. You can buy into it and stay invested for the long term, right? What you will see here and participate in, like how I showed you, is only for a short term, for a very short period of time, right? Okay, so I hope that's clear. How to join your prep zone? Well, there is a link that was shared with all of you. You can use it to join the prep, register first, and use the same number to log on to your Stogro account. You will see it in your prep zones, right? You will see it in your upcoming prep zones as Bulls versus Bears Bazaar, right? So that's the name that the team has decided to give it. So you will see that name here, and you can use that to join and proceed, right? What is short sell? Um, okay, women knew. So short sell is basically when you identify a stock, right? So let me give you an example, right? So you identify a stock, let's say Infibeam Avenues, right? You see the stock has fallen 5% on Friday, and you see there is a chance that the stock could fall further, right? It moved higher, it got corrected, and the stock could fall further. So what you would do is you would sell the stock here and buy it back here, right? It's basically the reverse of a buy, right? So it's like you're going short on the stock. So short sell is one mechanism through which people make money even when the market falls, because their bet is that the market is going to fall, right? Logically, how it's executed, you sell at a higher level first and then you buy at a lower level, right? And in real markets, when you decide to sell, there are, the broker will give you certain shares that they hold which you can already sell, right? So you're not buying into any shares and it's credit into your demat. It's someone else's share that you're pledging to short sell and buy at a lower level, right? So as a starter, simple thing for you to understand: if you think the stock is going to fall further, you can short sell, right? If you think the stock is going to go higher, you can buy. Okay, invested into 12 months funds, percent return on 3 months. Well, this. Okay, Saransh, that's a very, again, like a good question to ask. Basically, 12 mutual funds is a lot, because you got to understand each mutual fund is already diversifying your money into 50 shares, 50 stocks, right? And if you're investing into 12, right, there is one, there's going to be a lot of overlaps. And two, you spread your money across a lot of stocks, right? It's best ideally to pick only about 2 to 3 mutual funds, right? Then your risk is also covered and you stand a chance for more upside, right? So right now, from what you're saying, I can believe that it's completely risk proof what you're trying to do, right? But because it's completely risk proof, your idea of making more money is limited. So if you want to make more money, right, then reduce it to only 2 to 3 mutual funds. But if you want to stay completely risk proof, continue with what you have. Okay. Okay. Raghavan, best time frame, if you're doing it for a day, then your time frame should be 5 minutes or 15 minutes, right? If you're doing it for a week, probably then 1 hour, right? If you're doing it for anything less than that, then you could look at like a 1 minute, 5 minute time frames, right? Okay. Uh, Sukumjit, what's the difference between alpha and beta? Both are the same. It's just number one and number two. And the reason why it exists is so that you can participate in some of the open leagues that are there on the platform as well. There is no meaning to it, right? Don't attach the financial alpha beta meaning to any of it. Is FD laddering beneficial? See, I think laddering is one way in which you can grow your money, right? You can use that in mutual funds and elsewhere. But as an FD, the concept, your return is a little lesser compared to your mutual funds, right? It again purely comes on your risk appetite. If your risk appetite is controlled, right, then doing laddering in FD is beneficial, right? But if your risk appetite is no, I'm okay with, you know, a 20% drawdown, a 30% drawdown, then probably FD is not the right thing for you, right? So it all depends upon the kind of outcome you want. Okay, so with that, I think I've taken up all of the questions that there is, right? All of us can, so I'm most active on LinkedIn. So if you guys want to connect up, just look up for Suraj Kumar Stockrow, you'll find me. We can connect there if you have any questions outside of the prep zone and things like that. And around the prep zones as well, if you want to ask, you can write me on LinkedIn or you can write within the chat section of your particular prep zone, right? So please go ahead, participate in this league, use it to your advantage, right? Feel the power of investing 10 lakhs and seeing what happens with it, right? And there is absolutely no consequence to it, right? If you make good money, you're rewarded. You can buy some merchandise with it. If you lose money, there is not a single rupee that you will have to shell out, right? So use this opportunity to learn about stock markets and make it big, right? I just see two more questions. I'll answer. Diversify into multiple things such as bonds, etc. Is stocks enough, or should we diversify into multiple things such as bonds, etc.? Please answer this, sir. I also have the same doubt. Okay, two of you have the same doubt. So ideally, this is how the table works, right? So you want fixed return at 6 to 8%, and some smaller banks go up till 9%, right? You go with a FD, right? You want returns between 12 to 15%. You go to a mutual fund, right? And if you are playing with your own money in terms of, you know, investing, buying, selling, you know, into stocks, you need to be making at least 20 to 25% annually, right? If you're not doing that, then you're better off putting your money in a mutual fund. Now once you do it, right, then you see the other side, right, where people do your all your intraday trading and things like that. And if you're doing it, your expectation out of yourself should be to be making at least 35 to 40% annually. If you're not doing these levels, you're better off in the previous level. Why I say that is because as you move higher, the risk is more, right? When we say the risk is more, the chances of you losing money is more. And trust me, all of us can sit here and say, I am comfortable losing 20%. But the day you lose 20%, you're a different person, right? You are probably super depressed, right? So it's not easy. Nobody wants to lose money, right? And you'll probably all of you realize it when you guys start to. I hope that doesn't happen, but when it does, that's when you'll realize as to, you know, the what was being told to you in this particular session on a Sunday morning, right? So until then, you probably might feel, you know, my risk is okay. I will go to the riskiest side. I am okay to lose money. I will go to the side that gives you maximum return. But once you start losing money, that's when it will happen, right? So is stocks enough? Should I dabble in bonds, right? I'm telling you, stocks also come with its own inherent risk. So make it easy for yourself if you can't do it. If you're doing stocks, you're already getting that much return, right? So do it. Okay, Red Knight. That's some interesting thing. How to target and pick the stocks for short term. Punit, there are multiple ways, right? One is you start identifying support and resistance yourself, right? It might take a long process, but it's the best, right? In the long term, you find most value in it, right? How else is identify things that are in the news? Try to build your own stories around it, right? Saying, okay, EV is going to pick up. There are going to be more policies that are going to come around it. So use that to your advantage, right? Do study about it, right? Be careful about the risk side. and then go ahead and do it. One other way is we have an open platform where you can discuss about stocks on the social section at Stock Group, right? And then we have SEBI registered experts who keep discussing their views on particular stocks as well. You can look out there as well in terms of what is it that they are talking, what stocks that they are talking, right? Because they have been in this for long, they've read it, and that's their livelihood. They have a particular knack of identifying where there is momentum. Are they going to be right always? No, nobody is going to be right always, but they will give you an idea as to where you can get started in terms of identifying something, right? So pick ideas from there, do your own research, right? And be responsible for your own money, right? Don't be in a place where at the end you want to turn around and say, it's because of X and Y that I lost my money. If you're going to say that, you're going to continue losing money in the market. Okay, are small cap funds good to invest in as they can be very volatile but produce good results? Again, Saransh, small cap is your time frame 5 years? Is your time frame 10 years? Go for small caps. If your time frame is 6 months, right? Like probably you want to buy a bike at the end of 6 months, you want to buy a car at the end of 6 months, you want to relocate to your new job at the end of 6 months, you want to protect your money at that time, right? You're best suited to go to like a hybrid mutual fund, which is a mix of debt and equity, right? If your time frame is 5 6 years, you can go for equity. If your time frame is like 10 years 12 years, then you can go for a small cap fund, right? Basically, volatility, the best way to fight volatility is time. If you have more time, you can fight volatility, right? You can forget about the volatility and stay invested for the long run. If you have less time, volatility is your enemy. You can't fight it. Okay, awesome. So I think those were some max profit one can make in 3 days. I don't know. I don't know, sir. You tell me what's the max profit one can make in 3 days, right? Um, if you tell an answer that's more than 1%, it is speculative, and the chances are very less, right? Ideally, you can't. I think the question itself is wrong, Subhajit, right? Because if you're thinking this way, it's very difficult, right? You can talk about what's the max somebody can lose in 3 days, and I can surely tell you that's 100%, right? Um, but everything else, I think, is more up to what the person does. And if you control your risk, you will stay on the upside, not in 3 days, but for sure in 6 months, 1 year. Awesome. Thank you so much. And over to you, Kritika, to close it.
Thank you, sir. If you guys have any doubts, you can drop it in the chat box. I want to express my heartfelt gratitude for your insightful and informative presentation during the webinar. Your expertise and valuable knowledge you shared was truly appreciated. Thank you for your time and enhancing our understanding of trading strategies. I would also like to thank our sponsor, the Stockgrow. Stockgrow extends an exclusive opportunity expiring traders, empowering them to nurture financial acumen through webinars. At last, I would like to thank each and every one of you for your active participation and engagement in today's webinar. The presence and interaction have made this event truly special. We appreciate your interest and look forward to see you in the upcoming event. All the best. See you at the trading market. Let us see who becomes BSC Kabastan for this event.
Thank you, and all the best, guys.
Thank you, sir.